Welcome back, folks. In this video, I want to talk about another example of a first down day. I'm not going to go into too much detail of the strategy itself because I've already gone through this setup in previous videos. In this video, I just want to provide you another example, okay? First down day is basically when you have a day which closes below its open, okay? We had that Wednesday this week, okay? Go back and look at the trading on Wednesday, 28th of August, 2024. What I want to see after that, after we have a first down day, I want to see a crawl up. I'm looking for a short setup at the high of the day on the Thursday. And what you want to see is you want to see that crawl up and you want to look for where could you see a short setup. And here you can see on the Wednesday, we have the initial down day where the market has closed below its open. Okay, Thursday, we get this crawl back up to a level of inefficiency, okay, where we want to see a short setup, okay, maybe in a lower time frame. And you are expecting the market to give you a short setup the day after the first down day, for example, here on Thursday, or the day after that, which would be Friday in this case. Now, you're looking for the market to come back down to the low of that current day. This is Asia, okay, so anything below Asia would be the low for the current day, or the low of Wednesday, okay, so this is Wednesday. We haven't got to the low of Wednesday yet, okay. Now, you can also try and identify the market. You've got to kind of understand what the market's doing. So with this move down after the first down day on this Thursday, okay, I've taken that short, but I haven't closed out my position because what I can see is it's just building liquidity to attack these equal lows, which are still intact and most likely will be taken out sometime early next week, okay. And so you can see on Thursday, we have another sell high opportunity that takes out this low. Okay, because you've got to kind of understand what is the market trying to do. Okay, so this really should have gone all the way down and taken out the low of the week. Okay, the expectation is after a first down day, the market typically takes out the low of the previous day, okay, or the low of the week. So on this Thursday, we've got to move down, but all it did was take out the low of the current day, okay, or get down to the low of the current day. Okay, now when you see that, then you can expect that the day after will give you another short setup. We can see here the market has crawl down. This is the initial manipulation move down, getting everybody short on this move down. But you can see it's double-sided auction, very choppy. Okay, that isn't the real move. Then you get this impulsive move up. Okay, here you have your breaking structure. Okay, on 15-minute chart, we're back below this swing low, and then you're looking for a move back up to some level of inefficiency, okay, or some other type of bearish signature. Timing is important on these trades. Okay, this is at 8:30. Okay, ICT New York Open is at 7 a.m. So this is the second hour of New York, and then 30 minutes into that second hour of New York, inside of a level of inefficiency. Okay, after having a first down day and the next day not going low enough, okay? And so that is a great setup on that Friday to short, expecting the market to at least clear these lows and potentially the low of the week, okay, for that move down. And that's the one that I traded, okay? I did put my position on at this level once the market came into that efficiency on that Thursday after getting this first down day, but I did not close my position down here after seeing that it just did not go low enough. And I understand that what the market's doing here is just building liquidity to go down, because there needs to be a level of liquidity on the way down. Okay, so it built liquidity here and here and here. So these lows, okay, they're all swing lows beneath which reside liquidity. And really the market should have come down to Wednesday's low, which is the current low of the week. But again, all it's doing is building liquidity. These are relatively equal lows. So my expectation is the market will again pull back to some level and provide another short setup to take out the low of this current week that we've just gone through. Okay, that low Wednesday still is intact and will be taken. So let me quickly point you to the actual trade on my Twitter profile that I closed out on Friday. Okay, all my trades are journaled, so you need to always go back. So there it is there. Okay, so that's the trade. I think that's the one, or maybe it was a previous one. Yes, that's the one. That was my final lot. Okay, going down to that low through the original Thursday's low here, where the original liquidity was left for the next move down. Now, let's look at another example. Okay, this was another Wednesday, okay, where we have the first down day. Okay, so here, this is the Wednesday. This is Wednesday 21st of August, okay, where the market closed below its open. Okay, and then you can see on the Thursday, we have an opportunity to short that market down. Okay, so I call this the free cash Thursday setup because the best times I want to see a first down is on a Wednesday. Okay, because that is the middle of the week, and essentially you want to see that market on Wednesday close below its open. It doesn't have to be on a Wednesday, but my most favorite setup for this strategy is on a Wednesday. Okay, you want to see the market close below its open on a Wednesday, and then you want to look for your short setup. Okay, some kind of bearish signature. So I'm not going into too much detail. Go back and look at the previous example, but you can see we have a short setup here on the Wednesday. On the Thursday, where the market went down and took out, in this case, the low Wednesday and the low of the week. Okay, so you can see the market's pumping up again. Look at the time. Okay, pumping up. This is again a 8:30 a.m. So New York ICT New York kill zone is 7 a.m. Okay, that's when it starts. So this is the second hour, which is my favorite time to trade any session. And then this is the 30 minutes within that second hour. You can see the market's pumping up into this efficiency, okay, after having a first down day on the Wednesday, okay, and then this market goes down through Wednesday's low all the way down to the low of the week, okay. So you've got to go back and you've got to study these charts, okay. I'm just giving you a couple more examples, okay. You can see from that move down from last Thursday, we've just been going up, okay. So I'm going to put a line there because this level of liquidity is still intact, okay, and that's what you want to do. You want to keep your lows marked out so you know. So we've been going up, and since then we've been going up, okay, and you can see we're now starting to get down, okay. So ultimately you can see there's a lot of liquidity now. These are equal lows on the bottom there. That is the current low of this current week that's just passed, okay. So I do expect next week that we will have some kind of retracement back up, and again through to those lows, taking out these equal lows and obviously this low that's still sitting, okay. We'll do this a separate video on overall market analysis, okay. So I hope that this video helps you. You've got to go back and you've got to look at these on your own charts, okay. Go back and look at Wednesdays, where Wednesday has closed below to open, and look at what Thursday does, okay. So here, as I've said, we had Wednesday first down day, okay, it's called up. Thursday goes down, doesn't go down enough. We should really be taking out these equal lows here as part of that Wednesday down day, okay. When that happens, this is basically liquidity, engineering liquidity, okay. So then look for it on the Friday, bigger move down, okay. Again, look for inefficiency. You can see there's an inefficiency there. What time is the market coming back up into that level? 8:30 a.m. Align that with news for the volatility injection, but you need to be careful because news can also spike up and take out, you know, anyone that's already short that level. So you just got to understand how to manage your risk on news event announcements. I don't encourage anybody to trade the markets, okay. That is where the good opportunities are if you are advanced enough, but then I manage my risk by reducing my size, and I typically am trading in alignment with higher time frame. News announcements, it's not that they will not trade in alignment with the higher time frame bias. The risk is that it's manipulation. They may whipsaw up 50, 100 pips before moving to the desired direction. That's the risk, okay. So you got to study the charts, understand this setup, okay. There's plenty of videos I've done on the first down day setup. This is just another example, okay, that occurred last Thursday and Friday, and I still believe this liquidity below and this liquidity from the last first down day setup is still intact and needs to be taken. I will do a separate video on the analysis coming up, okay. Hope it helps. I will now talk with you in a future video.